Today, as requested from a subscriber, Royal King, I'm going to investigate Microsoft. Now, he also thinks it's undervalued, and I love undervalued companies, so let's go take a look. Microsoft is the biggest company in the entire world. Well, if you're watching this, maybe Apple is a little bit bigger than it right now, but it's really, really big. They both have been changing places a lot recently, and Microsoft's value is about 1.4 trillion, about the same as Apple. Now, $1.4 trillion is a lot of money, but let's put that into some sort of context. If Microsoft was a country, it would be the 15th largest country in the entire world. Yep, that's right, in between Australia and Mexico. Now, I grew up in Australia, so I know how big Sydney and Melbourne actually are. And for a single company to be as big as my home country, well, that's just insanely big. Now, this is actually a really important point when I look at valuing the company. See, when we look at the growth of Microsoft, because it's so big, well, the growth rate is going to not be as fast as, say, a small cap company. Let me explain. So it takes about 10 years to double your money at a growth rate of 7%. But Microsoft, from the analyst's opinion, is expected to grow at about 15% for the next 10 years. That's going to be 4 times as big as it is now. Well, if this was possible, then in the next 10 years, Microsoft will become the 3rd largest country in the world, beating out Japan at number 3. And my logical brain just sees that as being a little bit unreasonable. Do I really think Microsoft is going to be bigger than Japan, Germany, and India? These countries have so many people with so many different industries. I just don't see a company being bigger than those countries. I mean, I can understand that a company that's at $20 billion can grow to, say, $100 billion in 10 years, because the world is a big place and it can handle a company going from 20 billion to 100 billion. But can it really handle one company going to $5.6 trillion in the next 10 years? I want at least 15% from my investments, and I think it's going to be mind-blowing if Microsoft can keep pace with 15%. But on the other hand, I do remember 10 years ago when people would say that $1 trillion company just wasn't possible, but today we have $4 trillion companies. History is full of people thinking that something just cannot be done, and they're often just proven wrong. So I'll keep an open mind and just dive in a little deeper. But seriously, do I really think a company is going to be bigger than Japan? So we all know what Microsoft Windows is, and at some stage in our lives, we've all used a Windows-based computer. But right now, the current battlefield for Microsoft is actually in cloud computing. AWS, which is the name of Amazon's cloud computing, pretty much had 7 years of no competition in their marketplace. But that is until Microsoft, Google, and Alibaba started making inroads into this space. Azure, which is the name of Microsoft's cloud computing services, currently has 17.6% market share behind AWS at 32%. What is interesting is the growth rates. Azure, Google Cloud, and Alibaba Cloud all are growing at over 60%, whereas AWS at only 33%. It is clear that this is a very rapidly growing space, but the competition from Microsoft against AWS is strong. I have no clue who's going to win this battle, but what I think is going to happen is that each of the companies is going to be quite strong in their respective niche inside of cloud computing. For example, AWS might be best for corporations, and Azure might be best for developers, Google Cloud might be best for the general public, and Alibaba might be best for China. But hey, this is just a guess, and predicting the future is next to impossible. But what I do want to talk about is my own personal experience with Microsoft's leading income generator, that is Microsoft Office. Now, this is my experience, but I assume a lot of people have had the same experience as well. I've been a proud Microsoft Office user since high school, and I'm very familiar with Excel and Word. When I bought my laptop 4 years ago, I really wanted to make sure I had Microsoft Office installed on my Apple computer, not a pirated version. I wanted the real thing, and it set me back maybe $60 or $70. Well, I can't really remember, but I think it was about that. All of those assignments that I've written over the years, all of the business plans that I've written, all of the Excel formulas I've created, I really have strong ties to both Word and Excel. At high school and university, all my friends were using Microsoft Office, so sending a Word document or an Excel spreadsheet was really simple. And can you imagine sending like a notebook file to somebody? That's just crazy. It had to be a Word document. Now, I thought that I bought Microsoft Office for life when I bought my computer, but literally about 2 months ago when I updated my computer, well, it told me that I also had to repurchase Microsoft Office. Now, this is when I started to question, what am I actually paying for? Google Docs is free and pretty much the exact same thing as Word, and Google Sheets is pretty much the exact same thing as Excel and also free. So why would I buy the Microsoft Office version when there are free versions out there? Well, I wouldn't, and Microsoft Office is now dead to me. Now, this is all probably nothing new, and you've probably had this experience many years ago. I'm just not a very tech-savvy guy, and I'm very resistant to change, and change kind of needs to be forced onto me. I'm very late to the party when a new device comes out. I still have an iPhone 6. I am definitely slow with technology upgrades in my own life, but Microsoft forced me to make a change, and now I'm never going to go back. And Microsoft Office actually makes up around about 25% of all of Microsoft's income. This 25% actually makes up the biggest source of revenue for Microsoft. So for me to be completely off Microsoft Office without really any dramas, well, it just means that I think revenue is going to decrease for Microsoft over the next few years. And with more people working from home now in contract style work or as freelancers, well, they don't really want to pay for Microsoft Office when they can just use Google Docs or Google Sheets. So if 25% of the income is generated from Microsoft Office, it does mean 75% of their income is generated from other areas. And these business sectors are growing nicely, as we saw with cloud computing. I just see that 25% of their income from Microsoft Office is going to drop off. Now, you don't become a $1.4 trillion company without doing something right. So let's go see how they've been performing. Now, there are three key areas to the health of any business. We want to make sure they can handle their debt, we want to see if they're growing, and we want to see if they're well managed. Now, we want to see the company pass all three of these areas, but unfortunately, it's a bit more of an art form than it is a science. Now, I have general rules that I've developed about each of these criteria by studying the legendary investors Benjamin Graham, Warren Buffett, and Bill Ackman. But hey, just sit back and don't worry too much about the terminology, just get a feel for what's going on. First, we want to see if they can handle their debt. It is really important to look at the company's debt because if the business was to completely stop for some unforeseen reason, like some crazy government decision, well, with low debt, they're going to be completely fine. So to see if the business can handle its debt, I went through the debt to equity ratio and the current ratio of the business. And for Microsoft, recently, as you can see, the debt has crept above 0.7, which I want to see this under the red line. It is close, but not quite where I want it. For the current ratio, I want to see that above a 1.5, and for Microsoft, it's a 2.5, so that's great. Now, because the current ratio is solid, the debt to equity ratio is probably going to be fine being a little bit above 0.7, but we'll still give them just a half mark. Are they growing? Now, we obviously want to invest in a company that is growing, right? But just 1 to 2 years of growth isn't really going to cut it. We want to see long, stable growth. So to check for consistent growth, I look at the book value per share, the earnings per share, and the operating cash. There are a few little ups and downs, but across all graphs, we do see an upward trend. Recent guidance looks good, and in an environment when lots of companies are finding life difficult, Microsoft's Azure cloud services looks to continue to grow. Even though I think the Microsoft Office suite is going to go down, I do think their cloud service is going to pick them back up, so they're probably going to be pretty stable. Is the company well managed? Now, we can't just go and sit in and have a meeting with the management team at Microsoft and see what they're talking about, but there are some telltale signs in the financials that will give us the hint whether management are making good decisions. So I want to check for the return on equity, the free cash flow, cash on hand, and to see if they've got a dividend. Microsoft are hoarding over $120 billion in cash, and this is impressive. They can deploy this money into new opportunities and expansion plans. They will be able to take on the future in a good position. Free cash flow is getting bigger, so they are just a cash-making machine. The return on equity is really high at 40. Anything above 15 is great. This is really strong and is a really good sign. Management are doing great work and shareholders have nothing to worry about. They are also paying about a 1% dividend, which is a nice little bonus, but it's nothing to get excited about. So is Microsoft a good company to invest in? Now let's take a look at Microsoft through my intrinsic value calculator. And if you want a free copy of this exact same intrinsic value calculator, it's in the description below. So first thing we want to do is we want to put in the growth rates. So now the analysts think 15%, I feel like that's a bit aggressive. So I want to use 12 and 10% for the next 10 years. My return on investment goal is 20%. That's including a margin of safety. My multiple I could sell it for is 15. My cash flow minus maintenance capex, I went and found that is 49 billion, and the shares outstanding is 7.7 billion. And the price that I want to buy it at is $77.89. That's the first buy price. Now, let's go down to the second buy price, and I have that at $63.51 with a little bit more conservative data inputs and a bigger margin of safety. Now, my third buy price, well, that's even more conservative growth metrics and a bigger margin of safety, as you can see with 30%. And that price is now about $38. Now, if I go back to my first buy price, which I can see is $78 is where I would buy it. Well, if I go to the current share price, it's $188. That's far away from my first buy price. Now, I do think Microsoft is a good company, but it's just far overvalued. And just because it is a great company doesn't mean I can just go out and buy it at any price. So even though the growth is really solid and the company is very well managed, all of this has already been factored into the price. I would estimate that the company's fair value is around about $180 per share. So if we invested in the company and it continues to grow at say 10 to 15%, well, the share price might go up at around about 10 or 15% as well. But what if things start to slow down or a more serious issue comes along? I really just don't want to lose money. And with a price around fair value, I just have no margin of safety. There are times when great companies give us prices at around 50% of their fair value. So I want to invest in these companies, not the companies that have already reached their fair value. Try to think of it like going to a Michelin star restaurant. Now, you can't go to a Michelin star restaurant very often because it's like $200 for a table. But one day the owner comes up to you and says, oh, look, I'll give you a table for $100. Well, you're going to want to take that because it's just such good value. So let's just wait for our Michelin star restaurant table to be on sale. So to summarize everything, Microsoft is a great company and performing really well, but the current price is just far too high and we should look for a better investment. I also think that Microsoft Office is going to slow over the next few years, but cloud computing is going to grow. They are also a gigantic company, and I think that means they're going to have less upside potential than other companies that we investigate that are a little bit smaller. But I will be pouncing to buy if their financials are still solid in the future, yet their price falls to half of fair value. And until then, I'll keep looking for investment opportunities. Please hit subscribe if you enjoyed my analysis, and I'll see you in the next video.